Welcome to The Explainer. There's one signal in the global economy right now that's blinking bright red. The price of gold is absolutely soaring. Today, we're going to dig into a really powerful argument for why this isn't just some random market fluctuation, but a sign that the world's financial order could be fundamentally changing. I mean, just look at this. The price of gold has jumped by over $600 this year alone. That is a massive move. And it has a lot of people, investors, economists, you name it, asking a really critical question. So what's going on here? Is this just a temporary spike? Or is it a symptom of something much, much deeper happening in the global financial system? Now, you might think, sure, there's geopolitical tension, inflation worries, and those definitely play a part. But the argument we're exploring today suggests the real answer starts somewhere else entirely. Let's unpack. According to our source material from economist Peter Schiff, the key to understanding gold's rise doesn't actually start with gold. Nope. It starts with the very structure of the American economy. The central idea here is that for years, the U.S. has been riding on what's described as a global gravy train, basically a system that lets the country consume way more than it actually produces. And the problem, as presented here, isn't about unfair trade deals, but a deep structural imbalance that's allowed America to live beyond its means for a long, long time. So how does this gravy train actually work? Well, it's a cycle, kind of like a feedback loop. The U.S. buys more than it makes. The rest of the world makes up the difference and produces all those goods. And then, and this is the crucial part, they take the dollars they earned and lend them right back to the U.S. by buying American assets. The result for the United States? Artificially low prices, lower interest rates, and a pumped-up stock market. Okay, so you're probably asking, what does any of this have to do with the price of gold? Well, the argument is that this entire arrangement, which has been going on for decades, is now seriously under threat. Why? Because some of the biggest players on the world stage, we're talking central banks, are starting to change the game. And here's the kicker. According to this view, the real engine behind gold's big surge is that foreign central banks are making a massive strategic pivot. They're quietly selling off their US dollars and are instead stocking up on physical gold. They're basically preparing for a future where the dollar might not be king anymore. For decades, you see, the US dollar has been the world's go-to reserve currency. It's the one everybody trusted and held for stability. But what this analysis is suggesting is that the confidence in that stability, well, it's starting to crack. So let's follow this logic. What happens if the gravy train actually stops? If the dollar's special status starts to fade? Well, the prediction we're looking at paints two very, very different pictures for the US versus the rest of the world. It's really a tale of two futures. For the US, the prediction is a painful reality check. We're talking about interest rates and consumer prices shooting up. But for the rest of the world, it could be a moment of liberation. They could finally invest their savings in their own countries and consume the things they produce themselves. And this quote just hits the nail on the head. The argument is that the next big financial crisis might not be a global one. It could be a uniquely American crisis. In this scenario, when other countries are no longer supporting the U.S. economy, their loss could actually be the world's gain, maybe even sparking a boom everywhere else. Okay, so let's zoom out. What does all this mean for the future of money itself? The argument wraps up by putting this entire moment into a much bigger historical context. Check this out. For most of American history, the dollar's value was pretty steady against gold. But then, 1971 happened. The U.S. completely cut the dollar's tie to gold. And after that, the amount of dollars needed to buy 1 ounce of gold just exploded. So here's the crucial takeaway from this whole perspective. The rising price of gold isn't really the story. It's just a mirror reflecting the real story, the long, slow decline of the US dollar. It's a fiat currency, right? Meaning it's not backed by anything physical. And over the long haul, this view says it has consistently lost its purchasing power. So the analysis we've walked through today makes a pretty provocative case. It says the surge in gold isn't just market noise. It's a massive signal. A signal that the dollar-centric world we've known for so long is fundamentally changing. Which leaves all of us with a huge question. What comes next?